been searching for a podcast that can motivate you, inspire you, and teach you about business and life all at the same time? Well, we've got you covered. This is Beyond the Blueprint with Matt. Whether you're seeking to unlock the secrets of real estate success or seeking guidance in the world of marketing and coaching, you're in the right place, helping to educate and motivate you through real-life experiences with work and life. We'll uncover stories like how a family's homeowning dream turned into their living truth, or how a struggling rookie transformed into a top realtor. You'll find there's always a way forward, pushing the boundaries of what's possible. This is Beyond the Blueprint with Matt. And now your host, Matt Socci.
All right. Welcome to Beyond the Blueprint. I'm really excited to be here today. I have Eric Watson and Mark Jackson here, and two great loan originators that work for Premier Mortgage. And we were talking about starting a little series, The Path to Homeownership. And we thought it was a good idea to roll out a series. Probably, we could probably go on for 100 episodes. But to help educate the buyers out there in the market, because a lot of people just simply don't know where to start. And so we wanted to go over some topics and really just discuss the basic steps on the first episode and go into more details down the road as far as the different type of loan products and working with the right realtor partner, working with the right mortgage broker and company, and to try to help others out there that are in the market, potentially looking to buy, or people who have bought in the past, because things change in our world, every second?
Truthfully,
pretty much, right? So we're excited to roll this out, and we'll probably do it weekly until we run out of information to give, which I'm pretty sure we'll be able to go for a long while. So again, thank you for watching and listening. We will be putting this on social media, and hopefully you could get some nuggets out of it, and any feedback would be greatly appreciated. Eric, so why don't you just talk a little bit about what you do at Premier Mortgage and how long you've been working here?
I've been a senior mortgage loan originator now for just over 4 years. Here at all of my experience here at Premier Mortgage Consultants. I'll tell you what, it's been an awesome experience really from day one. You need mentorship, and I had some of the best mentorship available, and really taught me a lot about the industry's ins and outs of seeing a mortgage from receiving that purchase contract right through to the clear to closing. And really, we probably do it better than most. I promise you that, because of the attention to detail and the knowledge and the experience, the passion that we have. And I'll be honest with you, I'd like to add on to what Matt had to say, in essence, that if you're a first-time home buyer, if you've thought about it in the last 6 months, if you're in your early 20s or your early 30s and you've never owned a home, it seems like a complex process, and there is a complexity to it, but the reality of it is, if you've got a trained, seasoned professional, they'll simplify that. They'll hold your hand and get you through it every step of the way.
Yeah, absolutely. How about you, Mark?
Well, I've been in banking for probably 25 plus years, but I've been on the other side, the lending compliance. So it's interesting to be on this side of the table for a change.
So Mark knows all the rules.
I do know a fair number of rules, I have to say. But so I can help you through that as well. But yeah, so it's interesting to be on this side. And I have to say, honestly, I've only been MLO for maybe a month.
And you already closed the deal.
I did. Look at that. It was a lot of work. But it's been honestly the most rewarding month of my career in banking. So I'm super excited to be here. And honestly, the team we have here is amazing. And sometimes I wonder if things aren't going to work, but we end up making it work. So we've been very successful. They've been very successful. And I know I'm a huge part of that now. But
yeah, we're very excited to have you here.
Just kidding. Thank you.
Very, very excited. All right, cool. So we want to kind of talk about some basics. So I think the first topic we agreed upon is understanding homeownership. And it goes into a couple of different areas, right? So I guess the first part is defining what homeownership is. and the importance behind it, right? So in our lives, every single day, we talk to a lot of people who are renters or they are young and still living with their parents and ready to get out the door, right? And, when we talk about home ownership and its importance, I think of having the opportunity of, what they've always said is the American dream, right? You own a home, you start a family, you live there, and the average statistic out there is that you own a home, your first home, probably 3 to 5 years, right? And typically how the market goes in that time period, you have enough money to put down a bigger down payment and buy your dream house. And the perks behind owning a home, and I don't think a lot of people understand this too, is the write-offs that you get as well. It's not astronomical, but it does help. But I think the importance of having home ownership is having basically, that peace of mind of you have real estate, and real estate is 99 out of 100 times an appreciating asset.
Certainly.
And a lot of the wealthy people out there, the bazillionaires, they own land and real estate. Those are the two things. And a lot of people I talk to, they have 20, 30, sometimes 40 properties. And I'm like, this is going to be a fun loan to do. But at the end of the day, they're worth a lot of money because of that. So I think that's a really big thing is, having home ownership is that direction in life to set up your future.
Agreed.
Eric, how about the benefits of owning a home?
I think the reality of the benefits of owning your own home is not only owning your own domain, is, as we like to call in America, the American dream, or the king and the queen own the castle collectively together, and that's your place. But you're also building equity in yourself and in your own financial portfolio. As Matt alluded to when he was answering the previous question, you buy a home for $250,000. Realistically, in 5 years, if you're going to hold on to that property, theoretically, you should probably be able to sell it for $275, $280. And again, there's a lot of variables that come into play with how much your home appreciates relative, usually to location. But you're building equity, and you're not paying interest, and you're not building somebody else's equity, either a corporation or a landlord. And really, that's it in a nutshell.
Yeah, those are great points there, 100%. Mark, what are some experiences that you think that are related to home ownership? Like if you could go back in time, like thinking about the first time you bought a house.
Well, I've been blessed. I bought my first house at 23 in Pennsylvania, and I loved it. It was like a refuge from the world. When you come home from work, you got a place to go. Call your own. No landlord can come and tell you to get out, or
pick up your garbage from the end of the road.
You can't paint this color.
There's HOAs, but yeah. But it was amazing owning my own home. And honestly, one of the most rewarding things. And one of the things I see today a lot is millennials who are having a lot more trouble buying homes than we did at least I'm younger than you all, you and I. But they just don't seem to see a path towards home ownership. Most of them think that they need to have massive down payments and perfect credit, but that's just not the way it is these days. The government and the lending organizations have come up with programs that address almost every need, especially for people who might not have perfect credit and don't have that much to put down.
Yeah.
And it really, when I first came here, I guess I didn't realize how many programs there were for new homeowners, and, just how much easier it is to get into a home.
Yeah, it's crazy. When I bought my first house, it wasn't 20, 30 years ago. It was probably 15 in Connecticut. There were no programs.
Yeah, the world's changed immensely since then.
My rate was 6%. I had to put minimum was 3.5. I put 15 down or something like that. There was nothing. And now it's like I talk to clients and I'm like, there are so many programs that you could possibly qualify for, especially in Florida with our extra programs. And it's just amazing. Like the opportunity to own a home is easier now than it's probably ever been.
And I don't think people realize that.
Because everyone thinks you got to put 20% down because grandpa told you, back in the day. But back in the day, they were also giving away homes in Cape Coral on The Price is Right. So
exactly,
This is true. This is true. Which I think is a segue to our next question. Matt, what are some of the factors that influence when somebody's deciding to buy a home?
I think the number one thing that I hear all the time is I am tired of renting. And I think that's a huge factor because it's like where we live, the rent is very expensive. In Naples, I mean, you're looking probably $3,000 average a month.
That's probably if you're lucky.
If you're lucky. I mean, it depends if it's a condo versus a house, right? And I mean, even in BFE, you know, way out there, it's $3,000 to $4,000 a month. So when I talk to clients, and, you know, I do ask them in the beginning steps is, you know, how much are you paying for rent? Just to get a gauge, right? If they say $500 a month, I'm like, all right, well, I know where that's going to go. But if they say like $2,000 to $3,000 a month, I'm like, wow. So how many years have you been living in that house? And they'll say, oh, you know, 3 to 5, or, you know, 3 years. So then you take, let's just take an average aggregate number, like $30,000 a year in rent. That's $90,000 that they could have put towards the equity in a home, you know? And it's kind of shocking. And some people that are in their 30s or 40s have been renting their whole time. And you're talking excess of $500,000 to $1 million that they've spent renting.
In nothing. They've got nothing for it.
Yeah. And I think that's a big factor we hear today a lot is I'm just tired of paying rent. Now, as far as other people that own a home and they're trying to buy another home, here in Florida, we see a lot of people that want to relocate out of the north or different types of states for whatever reason that they choose. I mean, this is a friendly show, so we won't go in any of those directions. But at the end of the day, a lot of people move to Florida. It's actually a statistic. I believe it's about 80,000 people or families a month are moving to Florida. That's input. There's obviously output, and there's a lot of people moving out of Florida for whatever reason. It's getting very crowded here, but that's what I think is a big thing from my perspective.
Well, and I think just to add to that too, statistically speaking, I'm sure even on a nationwide scale, one thing you can say a high percentage of the time, no matter the amount of rent you're paying every single year, minus some sort of natural disaster or something along those lines, rent never goes down. Collectively,
I don't think
I'm
it's ever
sure
going
a high percentage of the time, rent always goes up. So whatever you're paying this year, when it comes time to renew that lease, it's going to go up. And therein is what leads to paying thousands upon thousands upon thousands of dollars into somebody else's equity and covering their interest rate and all of the other expenses of owning real estate.
And I think a lot of the kids, I mean, the younger generation, they just don't understand, you know, they either live at home until they can't live there anymore or parents want to move away. And it's a good idea. Like, you know, I think the financial literacy of what they teach children in school is zero. And us as parents, like, we have to help teach our kids. I mean, imagine if your children, like, you collected, if they worked, you know, let's just say they're 16, 17 years old, and you collected, I don't know, $300 to $400 a month, and you put it into like a savings account for them. 3 to 5 years, they'll have enough to buy a house, a down payment.
Absolutely.
And
yes.
I bet you the percentage of parents out there doing it is zero, because I'm one of them. I tried and I got rejected. We got rejected. They're like, no, we don't, you know. I was like, all right, that's your deal, you know, but then you're not going to get the help when you need it. You know, I think it's a good thing to do. I mean, there's a lot of things you could do.
Yeah, for sure. And, you know, if there wasn't money to be made in the rental market, corporations wouldn't be doing it.
Oh, yeah.
More and more and more corporations are buying up single-family homes and renting them out because that's just a way to make amazing money. And would you rather be on, what side of the equation would you want to be on, the homeowner side or the side paying rent, making somebody else wealthier? I mean, I think owning a home, there's, you know, it's not for everybody. I understand that some people just aren't in the position, but the opportunities to own, as we just spoke of, are greater now than probably ever. And, you know, we can help you get there.
Yeah. I mean, we wrote down a lot of topics, but I think alluding to this is like, all right, so let's just say you're currently renting. Mark, you and your wife are renting. What do you think are some of the questions or fears that people have to get to that next step? Like, are they scared to talk to the mortgage person? Or did they, like, what, in your opinion?
Absolutely.
Not on the paper here.
I think people are intimidated by the process just because, as you mentioned before, they've spoken to their grandparents or maybe even their parents, and they've said, okay, well, you need to have very good credit. You need to have, you know, save $20, $40, $60,000 to put down. And not many people are in that position right now with inflation going crazy as it is. Saving money is difficult. And if you're paying rent every month, it's even more difficult. So there's so many plans, and people don't realize that it's just within the realm of possibility for you to own a home.
Are mortgage brokers scary?
I mean, I don't think so. I mean, we don't look.
Not at all.
I always feel like they have a fear, right? People
Absolutely.
like a realtor would be like, "Hey, Matt, can you call Abby? Looking to buy." I'm like, "Yeah, absolutely. I'll text, call, email, throughout the smoke signals." And I'm like, "Is there?" They're just kind of nervous. I'm like, nervous?
Well, I think there's a difference between mortgage brokers and bankers.
Ding.
Bankers, the monolithic on the corner that, always seems to find a way to say no because you don't fit into their box, is not what we do here. We have boxes for almost everybody. I did the banking thing, working large banks, small banks, medium-sized banks for 25, 30 years. And it was my job to look at loans and, they all kind of fit into the bucket. 20% down, everybody has 700 credit score. And reality is not these days, especially everybody has that. And we can work with the people who don't fit in that box.
Yes. And I would like to add to that. Initially, when I first started doing this back in COVID, I would encourage anybody to call Premier Mortgage Consultants, of course. And if you're unfamiliar with the process, or you feel like you're a little bit of afraid because you're elementary, you don't understand these things, that's what we're here for. I probably had at least 2 or 3 deals that I closed in the first year where I had individuals that were calling me, asking me, okay, tell me what exactly I need to do. And the first step in the process, I think, for anybody is, one, formulate a plan, because without a plan, you better plan to fail. And that means you got to take a long, hard look at your budget and determine, where is this money going to come from to get pre-approved for a loan, and ultimately find a lender that's going to give you the clear to close. And any lender out there, they don't want to deal with anybody that doesn't have some skin in the game. And the skin in the game is your earnest money deposit. How much can you put down? Because the last thing that any lender or anybody that works at Premier Mortgage Consultants wants is for you to default on the loan and lose the home in foreclosure. So that down payment money is really where that's going to come from. And where you're going to get it, you got to have a plan, and you got to make a budget to find that money to make that happen. We can help you with the closing costs. We've got tons of lenders that we work with, as Mark mentioned, as Matt mentioned earlier, that are currently providing down payment assistance program. And certainly some of that money can be used for down payment assistance and or closing costs, but you still got to come up with some of the earnest money deposit on your own. And that's the skin in the game that the lenders are looking for, to know that you're genuinely serious. I think the other thing you need to look at, and as Mark mentioned, it's easier now than ever. 15, 20 years ago, it wasn't that easy to check your credit score. And today, everybody can have an app on their phone and instantaneously check your credit score. You got to get that credit score ideally up into the 700s. Can we go 680? Can we go under? Yes, but it gets a little bit more complicated.
I would say, as credit scores go right now, so 680 is kind of like on the government loans, you're top tier.
Correct.
But when you go to a conventional loan, you're middle of the pack.
Yes.
Even though you could go down to a 620 on a conventional loan, which, to be honest with you, unless you're putting 20% down or doing a condo, there's not many conventional loans being done right now because the rates are about a point higher.
Right.
But the FHA loans and the government loans are really easy for people because they make it more affordable and have different, more loose guidelines as far as that. But, going back to the fear, I feel like there's people out there that are right in front of our faces that are renting, and they're just scared to take that step. And I'm like, why? Because it's exciting. There's nothing better when you get a clear to close and you call your borrower and you're like, we did it. You did it.
Absolutely.
And they're pumped up. I mean, there's tears, there's happiness, and there's a whole bunch of different things. But, I think there's a lot of people out there, and for realtors out there, if you right in front of your face on your Facebook, you probably have 25 to 50% of the people that you engage with that are all renting. And the question is why, and how do we get them? Because I'll tell you what, what Mark said with the banking, how they want your perfect boxes. I had a client come to me with 740 credit score, 10% down, and Suncoast said no.
Oh.
It was the most beautiful loan I have ever seen. It was in and out the door, done in a week and a half.
That's interesting.
And that's the reality, is that there's a lot of realtors out there that have connections with people that have been doing this for, I think, probably way too long and should be retired, and they don't know all the new things, ins and outs. And that's why us being a technology mortgage company, right? We have all the different lenders. We have all the different options. We have everything. We have great people that work here that want to talk to people and make it fun and exciting. Is that getting with us is a different experience than going with John Doe from down the road. And actually, it's different with everybody. But at least we have in our circle here the same products, right? But we drive on customer service. We drive on those conversations.
Well, and I also like to think too that we're diverse, because we work with multiple lenders. And when I say multiple, I'm talking 40, 50 plus lenders.
Actually, Mark counted them.
Yes.
How many?
49 right now.
49. So there you go. 49 different lenders. They're not all the same. This is the wholesale market. And these lenders have target markets that they're looking at. So some of them certainly target the first-time home buyers, and they've got down payment assistance programs, and they love conforming products, FHA and conventional loan products. That's what their meat and potatoes is of what the products are that they're offering. And then we have lenders that their area of expertise are investment properties, and they offer DSCR loan products. And then we have lenders that are also in another area of the non-QM market for folks that are 1099 employees or they're self-employed. And those are completely different markets, and yet all of those markets can qualify for a mortgage to get a new home, to get a second home, a vacation home, or an investment property. And when I say investment property, I'm talking long-term. You find a renter, they sign a 6-month lease, they sign a 12-month lease, or we're talking some of the short-term rentals where somebody comes in, stays at your home for a week, maybe 2 weeks at the most, and they're in and out, and the next person comes in. And really, that's the advantage of Premier Mortgage Consultants. Is
everything.
We work with multiple lenders, and we know their area of expertise. So when somebody calls me looking for one of those products, I've already got half a dozen lenders in mind that I want to talk to and shop their loan package to.
Go ahead, Mark.
I was just going to say, so my first loan I did, it was a person I grew up with, and they were buying an investment condo, and they were working with another lender.
Don't give out names on the show.
Protect the innocent.
I've got haters.
Very good privacy. And they were working with another lender in town, and they just did not care for the lack of communication. Yeah. They just wanted to let what's going on with my loan, where are we at in the process, how are things going, what do you need, what else do you need from me, and I was just looking at her loan proposal just to see if the pricing was decent and that she wasn't getting ripped off. And we end up being able to save her, I don't know, $1,500 in fees and half a rate.
Lower rate.
0.5% lower on the rate. So, and it took me a few banks to get to that, or a few lenders, I should say, to get to that. But that's what we do, work the deal so we can make it work for the borrower. And she was super insistent on getting that, 0.5% down. That was really in her crawl. And we end up getting it and saving her money. So that's the value of having 49 different lenders you work with.
We're going to do an episode with all the stories, because I know, Eric, you got a couple. I got a couple.
Oh, absolutely.
Just in for time purposes. So we'll do an episode just of stories, right? And we'll tell the stories and what the difference is. Broker versus banker.
Yeah.
So I guess the last piece here, just to talk about. So first episode, right? So we talked about a lot of different things in the beginning. Why buy versus rent? Let's try to dive through what are the 3, maybe 4 important things to get pre-approved. And we'll start with job history.
Okay, job history. As I mentioned earlier, the last thing a lender wants to do is have anybody default on a loan. So your job history alludes to the stability of your income. At the end of the day, that's really what it's about. So in many instances, I would say a lot of your first-time home buyers tend to be W-2 employees. So the lenders are specifically looking for 2 consecutive uninterrupted years. And if you were in school or maybe expecting a child or something like that, a little break in service is certainly acceptable, and we can wiggle our way around that. But at the end of the day, they really like 2 consecutive years of service. And like industries, they're similar industries. So if you're a nurse, if you're a lawyer, if you're pick the profession, pick the trade, it doesn't really matter. As long as 2 consecutive years in there, that's what they're looking for. If you're self-employed, similarly, they want 2 consecutive years in that particular business. You've been the owner, and you can back it up with
2 years tax returns.
Yep, 2 years of both business and personal tax returns, so they can see and break down exactly what your incomes are going to be.
Okay, I agree. And if you do have gaps, it is okay.
Yep.
So there is a rule. We don't have to go deep into the different loan products, but typically, if you have a gap of 6 months or more, you have to be at the current job for 6 months. Typically, conventional is a little bit looser with that stuff, but I have a client right now where she hasn't worked in 20 years, so we had to go back to Puerto Rico and get her transcripts that were handwritten. Oh. But it works, And
Absolutely.
So you got to have a history no matter what. And like Eric said, if you go from doctor to taxi driver, it's probably different pay.
Correct.
But job history is pretty important. I think.
Real quick, just to allude or explain the point I was trying to make is I closed a loan late last year for a young lady that had been a nurse for 1 year. Well, the 1 year prior to being a nurse, she was in school to become a nurse.
Good to go.
And we provided her transcripts. She had 1 year employment as a nurse, and the lender approved it. And I'll be honest with you, she's probably been in that home well over 6 months now.
Excellent.
I'll tack credit. So, because I pull a lot of credit, I see everything on credit. So credit is really, really important. And there's a lot of people out there that use things such as Credit Karma, which is fake. Don't use that app ever. We like one here called My FICO, and it is a paid subscription. It is a soft pull, but it does give you your mortgage 2, 4, and 5 scores. So there's a big difference between your FICO 8s and your blended scores versus what we pull on our end. Typically, they could be anywhere from what you see on your blended scores or as low as 50 to 60 points lower for whatever reason. So if you're out there and you're thinking about buying, great app to get. This is not a plug. Don't work for them, but we recommend it because it's basically a soft pull on your mortgage scores. So for mortgage scores, typically you want to be 580 or higher on the government loans, which are VA, USDA, and FHA. For conventional, it's a minimum of 620 for the credit scores. So if you're in the ball game and you think your credit's bad, people have different ideas of what their credit being bad is. I talked to somebody, they thought their credit was terrible. It was 705. If to me, that's terrible for me, but in our world, that's good credit. You're good. But I did want to say something too, is that we have a lot of programs with some of our preferred lenders that we use that do things such as credit upgrades. So we have a way to help you go on a path to get your credit boosted. And they'll give us literally a path. You do the path, we resubmit it, they rescore you, new credit score, good to go. So credit score is very important in this market right now because if your credit score is low, yeah, you could buy a house, but you're going to get hit with higher rates and things that go along with
bigger
that.
Down payment requirements.
Right. So I've been telling people now is like, if you're looking to buy over the summer, even fall, let's get you on the path to homeownership. Let's look at your credit. Let's do a soft poll. Let's see where you're at. Temp check. It's okay to do that. So I think that's a big thing. I think the third most important thing, Mark, and you go with this, is probably liabilities.
So, yeah, when the lender is looking to approve you, they'll look at what you owe. Who do you owe? What do you, what's that percentage related to your income? You don't want to go out and get a new car just before you apply for a loan because they're going to count that against your income. And, sometimes that $725 car loans, probably not the best idea if you're saving to buy a house. Maybe if you're in a position for it, sell it, or even I've seen it refinance. And you can go, maybe you had a 5-year loan and you're down to 2 years. You can actually refi it for a decent rate and take it out for 5 years again, and it'll get it down to maybe the 300 range, 400 range. So there's several options, but what you owe, everyone will definitely be counted when you come, for a mortgage. So try not to spend as much as you could spend because they'll give you credit to everybody.
Beans and rice.
Sometimes. Even Taco Bell is more expensive than it used to be.
I know.
Ramen, maybe. But, there's ways to save money. So if you can save money and you can quit putting on your credit card, that's the best way.
Yeah, the credit cards are crushed. Well, they're not too bad because we only use your minimum payment to qualify. And I get a lot of people, I need to pay off my credit cards. I'm like, whoa, stop. Let's just check it out first because maybe you don't. Maybe it's not as bad as you think.
That's right.
All right, great. So a lot of stuff here. We want to keep it under 30 minutes. We are right there at the 30 minutes. So next week, we will roll out a little bit more in depth on different parts of this. So the first step is if you're renting out there, you need to get with any of us on the Premier Mortgage team. We're here to help. And we'll put links and everything for everybody below. And if you know anybody that's renting and there could possibly be a potential opportunity for them to buy, which I think there's always a possibility for everyone to buy, have them reach out. And we will upload this. So make sure if you are not following the podcast or YouTube, hit the like, subscribe, share with your friends, share with your family, share with anybody, coworkers that might be renting. We'd love to help them. Thank you so much for listening to Beyond the Blueprint. We'll see you next week.
You've been listening to Beyond the Blueprint with Matt. Matt's passion is to talk about breaking the mold and exploring the uncharted territories of mortgages, real estate, faith, marketing, coaching, and so much more. Helping to show you there's always a way forward. Thanks so much for listening to the show. We hope you've enjoyed it. If you did, make sure to like, rate, review, and subscribe. We'll be back soon. But in the meantime, you can find us on YouTube and Facebook and on all the major podcast channels at Beyond the Blueprint. See you next time.